Good day, Junior Tickies. I'm Mrs. Brimacone. We are now going to look at paper 2, question 4. And the next part of this video is where we're going to focus now on fixed assets. This is a topic which is not new to grade 12 learners. It's what you've covered since grade 11. Actually, since grade 10. It can be asked as part of paper 1 or paper 2, like in this case. So if we look now at 4.2, the following information relates to the fixed or tangible assets of Justine Footwear, Pty Limited, the financial year ended 28th February 2021. Required, list 3 points for good internal control over movable fixed assets. So I'm going to provide you with more than 3 options and make sure that you summarize this and study it for exam purposes. 1 is maintain an updated fixed asset register. Depreciation, carrying value, or the condition. Remember that a fixed asset register is an individual record of each one of our assets. Regular physical inspection, count the items, identification tags, in other words, barcodes, servants and maintenance plans, and ensure that this is done on a regular basis. Insurance plan to cover any loss or damages or by any accidents that may happen. Keep a logbook of the mileage. Install tracking devices. Note drivers or users in a register, authorization for use, record of time in and out. Only trained personnel to use the technical equipment. You cannot have employees who's not trained to use specific equipment. Cameras to monitor the use of equipment. Secure premises for storage, locked garage or alarm system in premises. Roadworthy. So these are all good internal control that you can have over your movable fixed assets. Remember, when we're talking about movable fixed assets, we're talking about assets, fixed assets consist out of equipment, consist out of vehicles. Question 4.2.2, refer to information A and B. Calculate the cost of land and buildings purchased on 31 August. So here they're specifically asking the cost of the land and buildings that was purchased. They provided you with the balance at the end of last year or the beginning of this year and the end of this year, current financial year. You should know that when we're looking at the land and buildings at cost, it consists out of balance in the beginning plus additions minus, if we've disposed of that asset, minus the balance at the end. Now they're saying to us in information number B, Glamour Construction provided an invoice on 31 August 2020 after completing the new storage facility. The full invoice amount was paid and debited to the land and buildings. However, the auditor found that repairs to the old storeroom, 60,000, were included in the invoice. This has not been corrected. So it means now that we need to correct this mistake which happened. It should have formed part of repairs and should not have been added as an addition. But now we first need to find out what was the addition. If I take the credit, there were no asset disposal minus the debit. It means that the additions was 750,000. Now we need to subtract the 60,000 for the repairs that was done. This means that the cost of the land and buildings purchased was 690,000. Question 4.2.3. Refer to information A and C. Calculate the depreciation of the vehicles for the year ended 28th February 2021. So an extract from the trial balance was given, and then they said vehicles. The company has only one vehicle. The depreciation rate is 25% per annum on cost. So there's no additions, there's no new that you need to consider. There were no disposal that you need to calculate on the old, the new, plus that which we sold. It only consisted out of the one vehicle. Now be very careful with this. If you calculate 480,000 times 25%, because we have to do it on the cost, it equals 120,000. Now this is a common mistake. We calculate the depreciation and we move on. You need to check if you add the depreciation to the accumulated depreciation. My new accumulated depreciation is 570,000, which means this will now be more than the cost, which means that your carrying value will be a negative, and you can never have a zero or a negative. So if this happens, you need to get the book value, because the carrying value at the end, another word for carrying value is book value, needs to be 1. So a simple way to find out the depreciation, take the book value and subtract 1 from that. And that equals the depreciation for this year. So be very careful. Always look. If you see that the cost and the accumulated depreciation, that it's that close to each other, there's only a 50,000 difference, then you should know, be aware that you might need to calculate the depreciation by minusing 1 from the carrying value in the beginning. Question 4.2.4. Refer to information A and D. The business depreciates equipment at 50% per annum, diminishing balance method, means the book value. On the 30 November 2020, they decided to trade in a photocopy machine for a new module. Calculate the loss on the photocopy machine that was traded in on 30 November 2020. So they specifically said to you it's a loss. Calculate the depreciation on the new photocopy machine and on the remaining old equipment for the year ended 28 February 2021. So here we need to calculate on the old, the new, plus that which we've sold. And what makes this more complicated is the fact that we need to use the diminishing balance method, which means that we need to use the book value. So starting now with calculating the loss on the photocopy machine. If we look at when we calculate depreciation on that which we sold, it's always from the beginning of the accounting period until the day that we have sold it. So that equals 9 months. They provided us with a fixed asset register on the photocopy machine that we have traded in. The cost was 320,000. It's 50% diminishing balance method. We've already got the carrying value. They've provided that to you on 28 February 2020, which is the beginning of the new, the end of last year, which means the beginning on the 1st of March 2020, the beginning of the accounting period. So all we need to do is we need to take 224,000 times 50% times 9/12. So this is where we make the mistakes by calculating the months incorrectly. So in my workings, because it's just workings, there are different ways in which you can show your answer. I'm going to open up the asset disposal account. The cost will always appear on the debit side. On the credit side, we would always have the total accumulated depreciation on the asset which we disposed of. That means it's the balance in the beginning plus my updated depreciation, which we've just calculated. Step number 4, record the selling price. The photocopy machine was traded in for 88,000 for a better model. So my selling price, because it's traded in, my details will be creditors control. This is not required. This is just for explanation purpose. 88,000. Now we can calculate our book value. Cost minus accumulated depreciation equals the book value. This is the amount which will appear in your tangible asset note, not required in this question. If we sold it for less than the book value which they told us, it means that we've made a loss. So the difference, or you can take the debit side minus the credit side, it will give you exactly the same answer, 85,600. So now to calculate the depreciation on the new. On the new, it's from the day that we purchased it until the end of the accounting period. Now we've traded it in on 30 November 2020 for a new module that was delivered on 1 December 2020 for 410,000. It means that we need to calculate depreciation from 1 December until 28 February. That is equivalent to 3 months. When we're calculating on the new, it doesn't matter if it's diminishing balance method or cost. Because we're calculating it for the first time, it will always be on the cost. So 410,000 times 50% times 3 divided by 12. Now to calculate on the remaining. There are different ways in which we can get to exactly the same answer. I'm going to show you the following method. If we calculate the book value in the beginning by taking the cost minus the accumulated depreciation, and we subtract that, or we subtract the book value on the asset which we disposed of in the beginning, we will get the book value on the remaining. So before I continue, let's go back one step again. So we calculate the book value on our equipment by looking at information A. This is the balances in the beginning. So my book value is 660,000. Included into that totals is the asset which we've disposed of, and we've already calculated the depreciation on that. We only had it for 9 months, and on the old it's always equivalent to 12 months. This is why we're going to subtract the asset which we've disposed of, and we use the book value in the beginning, and that equals the old and the remaining. Now we can simply say times 50%, that equals the depreciation on the remaining equipment. Question 4.2.5. The CEO feels that the land and buildings are worth at least 10 million and wants to adjust the figure in the statement of financial position, the balance sheet, accordingly. Explain why the auditor does not agree. So here, your GAAP principles is incorporated. Why can we not value it at 10 million, which is higher than what the cost was? We need to apply the historical cost rule. It should be shown at their original cost price, or prudence. Prudence means being conservative in reflecting an asset on the financial statements. The profit can be recognized or realized on disposal of that. It's unethical to manipulate figures in the financial statement or to inflate the figures, because that's what we will be doing now, is we will show it at what it's worth but not at what it cost us. And we might not even get the amount what it's worth by the time that we sell it. The CEO's opinion does not seem to be based on clear evidence, needs evaluation or an appraiser. If we just compare, the land and buildings at cost is 6,250,000. He feels it is worth 10 million. This concludes now the second part of our video, where the focus was on fixed assets. We are now done with paper 1 and paper 2. I truly hope that you have a better understanding of how to answer the questions. Use all the PDFs while going through the videos to also see how do we actually get to the answers as well. Have the question paper answer booklet with you and have the memo so that you can see how marks were allocated. The more you practice past exam papers, the better you will become at the accounting. I wish you all the best. Have a wonderful day.